Hello guys, welcome back to my channel. This video is about explaining the concept of compounding and to help you realize the power of compounding and how it can help you grow your investment account. Whether it is very small investment account, even that is really helpful. So you can, after seeing this video, you'd be able to appreciate how you can grow your small investment account into a bigger one. Okay, and the bigger one gets much bigger like that. So okay, so don't worry if you have very less amount to invest. Even then you can use this concept and grow your account, okay, bigger and bigger as time passes. Okay, so let me show you how you can do that. For example, you have a surplus amount of 2 lakh rupees that you're ready to invest, and you don't expect it to withdraw anytime sooner. Let's assume that. See, 2 lakhs is just a number. It could be just 50,000. So I don't want you to get demotivated by looking at this number, whether it is small or big. I mean, for some people 2 lakhs is small, for some people it's too big. So don't worry about it. It's just a number. You just put in whatever the number you want. If it is 10,000, even that's fine. Okay, for explanation's sake, I have put here like 2 lakh rupees. Okay, so now in year one, let's say you gain 26%. So I am assuming that we are gaining 26% year after year. Okay, and you might be wondering, is 26% a realistic number? Okay, so I want to clarify that bit right away. Okay, and then move on to this one so that you get a better idea like why I have chosen 26%, and is it realistic or unrealistic, or can it be achieved year after year. Okay, so let's go to our current portfolio. See, we have got like 20 stocks. Okay, and we have invested 5% of our investment in each of these stocks, which becomes 100% of investment. So we are fully invested now. We started on 23rd of February and it's now like around 10-11 weeks and we are fully invested. See, once you build these 20 stocks, now the fully invested, it won't ask your time much. Okay, only in building the 20 stocks you might have to spend some time in identifying those good 20 stocks, and as you can see, we took around 10 weeks to identify those 20 stocks. We didn't put all our money in on one single day in 20 stocks. We have to identify the right stocks, and then it took around as I said, 10 weeks to fully invest our amount. You shouldn't be in a hurry as such. Okay, so we have to pick the right stocks. So now we are fully invested, and you have to understand that you have to assess your portfolio performance against index performance. That's the key thing that everyone has to understand. There has to be a benchmark where you can measure the performance of your portfolio. In this instance, for example, on 23rd of February, index was at 14676, and on 14th of May, which is yesterday, it was at 14677. That means it has been consolidating. There has been no gains in index. Okay, but look at the portfolio performance. It has grown by over 4.5%. You see the difference? So this just tells you that you have selected the right stocks and the performance of your portfolio is really outstanding. So now let's assume like for 3 months we have gained like 4.5 or 5%, something like that. So when index starts moving, let's say if it starts gaining, I mean, I expect index to gain by at least 3 to 4% a year, right? So which is quite realistic, I would say, and you can expect our performance would be at least 26%. So it's not really unrealistic to expect 26% growth. Of course, there is a caveat there. You have to pick the right stocks, and you have to cannot simply select the stocks randomly, and that's the reason I have started this series, which is Portfolio Builder Series 1, and I update on my free Telegram channel, which you should really join that to get the live updates, and I post there before adding stocks to my portfolio, a day before or the day I would be taking the trade. So, and I also post there when I'm booking. And you don't know the rules of the portfolio, just pause this video and read through this, you will understand. Okay, so basically that's what it is. If you join this free Telegram channel, you will get the live updates. So this will help you identify the stocks and start building the portfolio. I mean, as I said, identifying those 20 stocks would be sometimes confusing, sometimes time consuming, and all those things. So that's why I'm here lending you a helping hand in identifying those 20 stocks. I'll be starting a series 2 portfolio builders shortly, So if you have missed this series 1 and you haven't added these stocks to your portfolio, that's fine, you can start fresh. Okay, I'll be starting very soon. Okay, so now understand the power of compounding. So now I think I made clear 26% returns is kind realistic. Okay, I'm not saying it's very low or very high. I would say it's reasonable. Okay, 26%, we can even grow and get more returns, but anyway, I want to be as realistic as possible and have put 26%. Let's say in year 1 your returns is 26%, so obviously your investment value would be 2,52,000. Okay, so in year 2 you would have again 26%, so your investment value was now 2,52,000, and it keeps on adding because get 26% of this one in the next year, and then like continues like that. So in year 1 your investment was 2 lakhs, and by the time you reach year 5, by the end of the year 5, you would have had like nearly 6.5 lakhs. Okay, that's a massive returns, isn't it? Right? So this is the power of compounding, and as long as you keep investing in this and then keep generating these kind of returns, it's really going to be like growing exponentially. Okay, because your investment value would be going higher, right? See, it keeps on going higher, and by year 10, you see here, you would have got like 20 lakhs, 10 times 10x growth of your investment. Okay, and you might be wondering, these are all good on paper and it's just uh, not realistic at all. It's just theoretically it looks good, the power of compounding. Yeah, of course, that's what many people say, and I'm not saying it's easy to achieve these kind of results. Theoretically it looks really good, yes, and achieving 26% year on year is difficult, yeah, but I'm also saying that whatever the percentage I have written here, 26%, it's quite realistic, and it's, I would say, lower, it's towards the lower end itself, it's not at the higher end. And I gave you the example as well. So as time progresses, I'll be updating this portfolio as well. I told you very clearly index performance has been flat, but our portfolio performance is over 4.5% in just 3 months. So expecting, and just imagine, when it is flat we are doing this. So if index performance is good, let's say it grows by 3% or 3.5%, then obviously we can easily achieve this 26%. And it's not an exaggeration to say that I have put here is year 1. Okay, and you could probably achieve this 26% in half year itself, in 6 months. It all depends on the stocks you select and how they perform. Okay, so, and for the stocks to perform, if there is a proper push from the market as well, if the market sentiment, overall market sentiment is good and it's bullish, if Nifty starts going up, then you would really get some very decent returns on the portfolio. So this is the idea, guys. If you like this video, please give me a thumbs up, share with your friends, and subscribe if you haven't done yet, and also click on the notification bell so that you get notified as soon as I post new videos, and join my free Telegram channel where you get some live updates. Okay, the description of that Telegram channel is in the details of that is in the descriptions below. Okay, thank you guys, see you soon.